Hi everybody, welcome to another update on the stock screener. Today we're going to continue our due diligence on Pieridae Energy and we look at Canadian AECO gas pricing. So these are the forecasts that Pieridae uses for their gas price, and this is dated from March. They used a forecast of 3.3 AECO gas. These are very low estimates, and they use these estimates to calculate their reserves and NPV. But I think that these are much too low, and let's see what the current AECO gas forecasts are. So keep in mind 3.3. Deloitte is now forecasting, and this is from June 2022. They are forecasting an AECO price of for next year 6.2 and real 6, so much higher. For 2024 it's around 5, and then 4.7, 4.8, and it will stay at around that level, 4.8 to 5 in the coming years. Okay, and you can also see that in this chart Deloitte has upped their estimates from March, and in March it was 5 going to 4 going to 3.3, which is actually almost the estimate that Pieridae uses. But in June they have upped that estimate to here, and now it's 6, 5 and 4.8. Okay, so that's a huge increase. That's 50% higher, and from here it is also 50% higher. Birchcliff in August has estimated their, and this is the 5-year plan, from 2023 to 2026, they use an AECO price of 4.6. So that's about here for 5 years average. So which is still higher than the 3.3, about 50% higher. So all the estimates tell us that AECO is going to be 50% higher than the previous estimates, right? And it's about 4.6 to 5 in the long run. And in the short term, it's even higher. Now, this is important because these Pieridae reserves are calculated based on the Deloitte numbers of January. And the Deloitte numbers of January were these, okay? 3.3. So they started with 3.3 and then they upped it. And what does this mean? This means that we have a 50% increase in the price, and NPV is not linear, so this could be a double in NPV for the next year, 2022 reserve, which they will publish probably next quarter. That's a catalyst, okay? That's a catalyst. They will be using a much higher price forecast, and this line here, this is the NPV, could actually shoot up in the next quarter. That's a very good outlook. You can also see here the forward curve. It's about 6 and then 5 and then 4.7-ish. Okay, so I think the AECO price is going to be very positive. Currently, it's trading at 6.7, and it's going to go higher in the winter. Now, on the negative side, Pieridae has increased its capex and also the operating costs, which I missed in the previous video. Operating costs are up because their net operating income was actually lower than the estimate. So I guess that the operating costs will hit the $20 for transport plus operating costs. And yeah, we need to take that into account. Production is going to stay at this level because they are paying off debt right now. Once that is done, then they can still increase production later on. But priority is debt repayment. Now let's take a look at the valuations. Knowing the new AECO pricing and the new operating costs, I added 2 to this. So this is just an estimate. I don't know yet. So we need to look at the Q4 numbers. But I added some to this, and capex 70 and interest 30. So let's say next year we are going to have 6 AECO based on the Deloitte estimate on average. So that's about here. We will have yearly free cash flow of around 300 million, which is much higher than the 150 million market cap that we have right now. That's double the current market cap. So if AECO stays at 6 for a year, they're going to make a lot of money. 300 million, which is easily enough to pay all the debt. And that's based on the Deloitte price, which is going to be 6 next year. So in the best scenario with the Deloitte pricing, this company could pay off all its debt by the end of next year with this free cash flow. Okay. We are not going to see gas prices go back to 0 or 3. That's over with. Then the next year, we are going to see prices go to 5. Okay, that's in 2024. Pricing will go to 5. What is the cash flow? It will be 150 million. Okay, 150 million for 2024. That's 1 times the market cap. Okay, they will have paid off all the debt. By the way, if they pay off all the debt, the interest is going to be 0. So at 5 AECO, we have 200 million free cash flow. Okay, that's much higher than the 150 million market cap, below PE of 1. So what are you going to pay for this company? It's an easy double and a triple if AECO is at 5. And then the next year, we go to 4.8. And at 4.8, let's say 4.5, we still have 150 million in yearly free cash flow, which is 1 times the market cap. Okay, this is an easy buy to me. I don't know why people can't see this. So the next catalyst is probably in the next quarter that they are going to refinance the debt, which is pretty high, but they can pay it off at current prices. And the refinancing will probably delete some of this interest. It will probably go to 20 or 25 per year instead of the current 40. And that will also be a catalyst. So we have 2 catalysts. Reserves will go up, the NPV will go up due to increasing of the price forecasts, and refinancing will decrease interest payments, which will also increase the free cash flow, which is probably going to be above 200 million at current prices. I think AECO pricing will be above 5 for next year, at least. So you're going to see 1 times free cash flow coming in. A lot of the debt will be paid off by the end of next year, and the stock price is going to go up. Okay. So this was a small update on the AECO pricing, and I'll see you in the next video.